Most traders get crushed by breakouts. They chase the move, they get stopped out, and wonder what went wrong. But what if I told you that over 80% of the time, price returns to one key level before continuing? We call it the invisible 50s. In this video, watch as I coach a trader through a powerful live session, showing him how to finally see the 50% levels and shift his entire approach to trading breakouts. This isn't theory, it's what we do every day in the markets. And it works. During our live trading, that's his problem in trading is he doesn't trust the 50s. He doesn't trust the invisible, or either he doesn't trust the 50s or he can't see the 50s. And sometimes we, as traders, we can see it in hindsight when we're looking back, and when you are looking back in your trading and you're like, oh, why didn't I do that? Oh, it's so obvious. Because it is. It's a lot easier to look back and say, oh, I should have and I could have. It's a lot harder to see where's it going and what should I do. I'm going to have you do this exercise for me, Kovash. Get your pen out and draw on the chart. Let's do it for buys since the market is moving up. Let's find out all the times that it broke out. Just do a line every time that it broke out, and then we'll go back and count how many times it came back to 50.
Okay. Let's see. I think we have it here. We had another one here. I guess we have a small one here.
Okay, so now count those iterations. How many times did that happen on the chart? On this chart, and this is a
one.
It's just, what is this, like 9 hours of data here, maybe 10 hours.
7 times.
All right, so 7 times we got a breakout in 10 hours. I'll just call it 10 hours. In 10 hours, we've gotten a breakout 7 times to the buy side. Is that a fair statement to say?
Yeah.
How many times out of these 7 times did it break out and pull back to the 50% of that breakout?
Okay. Let's see. 1 did. And then 2 did. And then 3, not quite. Oh, I guess if we count it all the way up here to here, then maybe, then that just so, I guess, 4.
So it depends on what you're counting. You're not counting this one, but you would count that first retracement did right there. Do you see that?
Would we, is this the full thing?
No, it's after the breakout.
From the breakout.
From the breakout.
And that did. Yeah.
So it broke out here, came up to here, came back more than the 50. So you definitely count it.
Yeah, okay. Let's see, then this one did, in that case, 5. Eventually, so what about 5 with like eventually it did, but immediately it didn't?
It didn't. I would say that one didn't do it.
Okay. And then 6 did. So 4 did. Let's put a check mark. So I think, oh, and then 7 did. So one of them didn't, which would be 5.
So if we're talking about to the 50, 6 did, 1 didn't. So about 86% of the time, right?
Yes, 86% of the time it did it, 14% it didn't.
Now let's talk about the time that it didn't. What did it do?
It went sideways.
Yep.
Yeah, that's the main thing. Is it came up, it tried a little bit, and then it came up again, came up again, didn't. It came down to a level, but like just didn't, and then it broke out. And it even, I can see a wick, I think, where it broke out and came right back and touched the top of the consolidation and then took off.
Just to simplify it, the time that it does not come back it generally makes this the 50. If we wanted to simplify it and say 80% of the time, it's going to come back to the 50. 20% of the time, it'll make it the 50 because this now becomes the 50. Get
Yes.
this move, you get this move, comes back to the 50. Because you actually failed to count this one too.
Oh,
because
yeah.
you treated it as the same move, not after it breaks out. Does that make sense?
Yeah.
Because if you just opened up your chart and you said, let me trade here, I would treat this as a breakout.
Yeah.
And coming back to the 50 of that. But in reality, it's coming back to the 50 of this big move here because it made that the 50. So to simplify, these are the 50s that are visible. These are the 50s that you can see. These are the 50s that are easy to mark up on your chart. These are the tough ones that you can't see. So if it breaks this, because of what we just did, if it breaks down here, where should the market go? Remember, this is the 50 of this move.
So the hunt to the 100?
It doesn't necessarily need to go there in one candle.
Yeah.
Whatever this candle is on the break, we know it's coming back to the 50.
Oh, yeah. I see what you mean. Okay.
Does that make sense?
Yeah.
So there's two ways to play it with the invisible 50, which the invisible 50 could be here, could be all the way down to here, right? If this candle does break, come all the way down to here, there's no opportunity. But if it breaks, pulls back, and you're like, oh, it's coming down to here, you could enter there for the continuation.
Yes.
It depends. I don't want to get too complicated here because it really does depend if I'm buying or selling, which way I play it or how I play it. But the behavior is the same.
Yeah. Yeah. I think I do try to play those, get in at the 50 for continuation. And those have been challenging for me because that's sometimes where it just it blows past or continues on up. The 50 doesn't hold.
So let's play this out really quick. If it breaks to the bottom, mark on the chart where it's going to go.
Okay.
If we get a breakout. And if not, and if it comes up to the top, we'll play the breakout. So we're just looking for where it's going to break out. All right. So would you call that a breakout?
Yeah, I would.
You might be splitting hairs here. It's not an obvious one.
And it started so high up that I would be a little cautious that it was running
So
out.
I don't really trust it, but however, you got a 2 price cycle move. Do you see that?
Yeah.
So I don't really trust it to break out. But if I think we're coming down to here and I'm going to play it this way, anytime I get a pullback, I might be able to enter for the breakout.
Yeah. Yeah. I agree with that.
Does that make sense? This is not a good place to enter into a sell.
Right.
But it's giving you a signal that we might get a pullback to the 50 and we get enter if we're looking for sells.
Yes.
If you're looking for buys, then you got to say, if I start my buy here, there's a good chance it could come all the way down to here, and I just need to add into a buy here. Does that make sense? So again, it just depends on how you want to play it, but I don't want to necessarily make this conversation about how to play it on the buy side or the sell side. I want to make this conversation about seeing the 50s. So we're going to wait until we get a really strong confirmation that this is the break. Right? So this next candle, in my opinion, should pull back before the break, and we'll see what it does.
Okay.
So there's our pullback. Do you see that?
Yes.
Now what should it do?
Now I would expect it to try again to the downside.
Try again to the downside. Yep. Okay. Now what should it do?
I would expect it to test the 50 of this retracement that's happening.
So this is one I'm thinking right now. If it breaks above here, we're going to come up to here. If it breaks below here, we're coming down to here. Would you agree with that?
Yes.
I don't care what it does. I'll make money in either direction. I'm just trying to identify what direction it wants to go. But a failure of this is a really strong indication that we're moving this way. A break of this, because it's the 50 of this box, a break of this is a really strong indication that we're going to test the top.
Yes.
Does that make sense?
Yeah, it does.
Are you with me?
Yes.
So this candle has all the information. I don't know which way I'm going to play it yet. I'll let the market make that decision. So I'm just going to sit on my hands, let the market make that decision. And that's a pretty good sign that it wants to break. And especially the failure of this 50, I'm probably getting in.
Yeah.
To a sell. And we'll see. I mean, looking for a really good break so we can play the 50s here. We got news coming up too. I want to be cognizant of that. So there's our break. Now, the invisible 50. Where's the invisible 50 at? Mark it on the chart. Where's the invisible 50 at? The invisible 50 means it hasn't created it yet, but it should.
Here?
Yep. And what is that of? Like, where's the start? Where's the end?
This would be the start. And then the end would be, I mean, I guess where it is.
Yep. So guess what? Two things are going to happen. One, you're going to be correct on this will be the 50. Two, you're not, and it makes this the 50. So what happens if it makes that the 50 right there? Where does it go? Exactly. And lo and behold, that's a 1, 2, 3 price cycle move. It's right there.
Yeah.
Do you see that?
Yes.
So do you care as the trader? Do you care as the trader what it does here?
No, not really.
Not really, because this is a really good area to smack in.
Yeah.
Because you're also getting, it created this the 50, it failed the 50 here. You get a 3 price cycle move, and this is a good area to smack in. But confidence says, if I'm wrong, look at all this. It could.
Yes.
Could
Oh my gosh, that's so true.
Do you know what I mean?
Yeah. Yeah.
So this is probably a really strong area that gets ourselves. This is a good example of what gets us into trouble trading, right?
Yeah.
Is right here, you get in on a buy, thinking, oh, it's going to turn into a W. It doesn't. It breaks down. Okay, I'm going to get in, and you get into another buy here, and it doesn't give you this exit, or you're thinking, or your break evens here, right? Or somewhere up here. Doesn't give that to you. And then it gives you another move down. And I don't think you do this, but this is something that we've had to clean up with a lot of traders of stop adding here, stop adding here, stop adding here, and stop adding here. Do you know what I mean?
Yeah.
This is the definition of willy-nilly adding, right? You don't want to add willy-nilly there. So we add here and we add here. What happens is that when we add here, we get our break even here. And that's the wrong execution. Because if it is going to come down to here, this is your last chance to get out at the 50.
Yeah.
So you make your break even at the 40 of this move, or exit at the 50. Are you with me? But, and this right here probably pays you 2 money. If you execute it correctly, you get 2 money out of here. And if you're doing the nickel and dime, this move back here is a nickel. This move back here is a dime plus. So I don't really care what you do market at this point in time. I'll take my nickel here, or I'll take a dime, and if you reach up back into here, it could be gold. right?
Mm,
I don't care what you do, but I'm going to add here for a nickel here because this is a high, again, 80% chance that it's pulling back to the 50 of this move right there. If I told you 80% of the time something was going to happen, would you put money on it?
oh yeah.
And now you've told yourself that because we've done it twice. We did it in the last class where you went through and you did 6 or 7. This one you did it 6 or 7 times. Do it 3 or 4 more times of just mark it up on your chart, see how many times it does it, and you'd be surprised that 80% of the time, maybe even closer to 90 out of 10 times, how many times does it do it? How many times does it fail? You start seeing the invisible 50s. So let's just play this out and see what happens here. So the next candle comes down. Isn't that interesting? Is that the 50?
That is a 50.
That is the 50. Is that a nickel?
It should be.
It should be. And I'm not going to measure the pip distance or anything like that, but as a trader, if that's not a nickel, that's your fault.
Yeah.
Does that make sense? If that is not a nickel, that's your fault in execution. Because that should be a nickel right there. Now, what's the next move the market's going to make?
It could. I feel like probably testing this 50 and maybe this spot could go ahead and continue up here. But since I think we had the break and we crossed this, I feel like we're going. I maybe I'm making this too complicated, but
You are. You're making it too complicated.
okay.
The answer is, the short answer is, what's the next move the market's going to do? This is a 50-50 at the 50. So as a trader, the short answer is, I don't care.
Okay.
Does that make sense?
Yeah. Because we're waiting for.
Because if this is a nickel, if this is a nickel and we executed right there,
yeah,
and it closed right there, that's nice that it didn't just wick there.
Yeah.
Candle closed there. Thank you very much. I'm going to take it. Because I don't know, like you said, I don't really know. It could come up to here, or it could come back to here, but I know I got a nickel.
Yeah, okay.
So I take what I know. Put it in the bank. Say, thank you very much. Now what are you doing? I don't care. Come up to here. And if you come up to here, isn't this a good time to sell? And if you come down to here, isn't this a good time to buy?
Yeah.
So show me, market, what do you want to do? Right? I don't care. I don't care what you do. But let's go back to seeing the invisible 50s. If it comes back all the way up to here, it's 100%. Right? If it comes back up to here, it's 100%.
Yeah.
If it fails to go there, then it's at the 50, and we could see a continuation for another run down, another leg down. Well, let's see. There we go. Honestly, again, this is more deeper. I look for stuff like that.
So Dave,
It
in
gives
that
me a
scenario,
good
where were you
indication.
adding trades?
Like I said, I would have gone out here at the nickel, and I probably would have jumped back in on the sells once I see the 2 wicks on top.
Okay.
But again, that's not necessarily part of the what I'm trying to talk about. So I don't want to. There's so many different tangents that you could bounce off of what we're talking about here. I just want to keep it directly to where's the 50. Bounce, came back, get this double wick. That's a good indication that we're coming down to here. Or even here. But we're making it, if this is the 50, it'll go equal distance, which is here. Do you see that? It should go there. And anytime that I know the market is going to go somewhere with a greater than 70% assurity, and it doesn't do it, then I'm like, What? Why not? What are you doing, market? And then I sit on my hands, wait for the market to show me, and then capitalize once it does. I don't try to force trades into something because I need to get out. So I need to get out. So I'm going to add a ton of trades to get me out. The market doesn't care what you need. Do you know what I mean? So you
Yeah.
have to wait for the opportunity to when you start to know, okay, now I see what you're doing. You didn't do what I thought you were going to do. Now I see what you're doing. So again, it's probably the probability is really high that we're coming down to here. And look at that. If you had gotten in right here, this is where max profit is. But what are you doing right now? You're securing for a prove me wrong. Right? But let's go back to invisible 50s. It just broke this. Where's it coming? Invisible 50s. This is a hard one.
Yeah.
This is a hard one. This is a hard one because there's a bunch of things that are happening here, but this happens all the time. And this is the case in point of the conversation today, the invisible 50.
We might be at it, but yeah, what Ricky's marking is
No, none of this stuff.
none of
It's
that stuff.
same thing that we did over here at the very beginning. Once it breaks out, it should come back to the 50.
Yes.
So if this is the breakout, where's the 50 of this breakout?
If it stops right where it's at,
That's the reason why it becomes difficult.
yeah,
Because over here, you know where it stops. Over here,
Yeah.
you don't.
yeah.
Does that make sense?
Yeah, that does make sense.
So that's why it becomes invisible. Where over here, it's easy to read.
Okay.
Because again, we're just looking at it just broke out of this. Do we
Mhm.
honestly believe that it's going to stop here, come back to here, and that's the 50?
No. Yeah.
No, why not?
Hmm.
It could.
It's just not much of a breakout. I don't know.
It's not much of a breakout. It could, and also combining it with that's the first time it did it.
Yeah.
So the chances of it having a coming back to the 50 and then continuation down here is not very high. Would you agree with that?
Yeah.
And you got a 1, 2, 3 price cycle move and then a little extension. So because of this move right here on this breakout, I'd say it's coming back to the 50 right there.
No, I see.
And if I don't have any trades on, I'm buying right there
Hmm.
because I don't trust it. It's got 3 price cycle move or 2 price cycle move. It made this the 50. It could easily come back up to here. And if it doesn't do that, decides to come down to here, isn't this still a good place to buy?
Yes.
It's still a good place to buy, to start your buys.
Yeah. Can we talk
Right.
through if you didn't play these wicks as a sell and you for whatever reason took a buy here?
Then it goes back to you as the trader. It's your job to get your break even from this break to the 40.
Okay. Okay.
That's your job. 40 is probably here and then the 50s here.
Yeah.
Makes sense?
Yeah. Yeah.
That's your job to do that.
Okay.
So if you're on the wrong side of this move, so there's 2 ways to play it. One's you're on the right side, the other you're on the wrong side. And you need to master both because you're going to be in both at some
Yeah.
point.
Definitely.
Right?
Yeah, because I could see myself thinking like, oh, this whole thing has been going up, and I think this long-term trend is going to hold, and I'm going to get a turn, and then I'm going to take this buy here, and then yeah, when I get this big break, I start feeling panicky because of what you said. Like, this is a big drop off. There's a lot of space here. This bounces really maybe if it bounces at all, this is my psychological conflict, which is if it bounces here, that might be my last chance before it turns and really takes off. But if I load up here, there's a lot of like fear that it just continues down to I don't even know where here, I guess.
So this is the part that goes back to you personally.
Yeah.
You should not have any fear here, because if you load up and it fails, you get out and you take the loss.
Okay. Yeah.
Does that make sense?
Yes, it does.
Your execution is, I'm going to load up here because it should do this 80% of the time. It should do this. And if it doesn't, I don't want to carry these trades through another leg down.
Yeah.
I cut them now and I add them back in once it's done.
Yeah.
Because I think you're a good enough trader to understand that when you get a move that's a large move, the response is coming. Can you see that when there's a large move, it's a matter of time? If the market, again, I think you're a good enough trader to recognize this, that if the market is moving up like this, are you buying here or are you looking for a sell here? Because it's overextended.
Yeah.
What does that say? Does that tell you I should buy here, or does that tell you that you should sell here?
Yeah. Probably.
No, that's a question. What does that tell you?
That I should sell.
Is that a question back to me? Because I didn't sound very confident.
I personally always am seeing the counter trend move. I have a really psychological tough time believing that a trend will continue. I think it's rooted in what comes up must come down, like gravity. I think like I just relate, like looking at a chart, I just think, oh, it went up, now it's going to come back down again. So yeah,
there's nothing wrong. That's exactly what happens. It's just when is the question mark.
Yeah.
Do you know what I mean?
Yeah.
Is when is it going to do that? And so sometimes you'll be like, if it goes up and you get into a sell and it goes up equal distance, then you think, oh man, I was wrong on that. And then my confidence gets shattered. Does that make sense?
Yeah.
That's why combining it with the 50s, the invisible 50s, is so important, because guess what? You buy here, and if it goes up, you just bought at the 50. So you buy again, equal distance. Or so you sell here, and it goes against you.
Whoa, what?
Sorry. You sell here, again, equal distance.
Yeah.
Break even at the 40, out at the 50.
Okay. Yeah.
Does that make sense?
Yeah. I think so.
That's why reading the market, reading the right, getting to know where these invisible 50s are is crucial to how you execute, to where I'm going to add trades, not add trades, or exit if I see a failure. And that's as simple as that. I think the biggest thing that I'm asking you to do for Mr. Kovash is exit, because I don't think you do.
Yeah, no, I don't. And I think that would be the biggest change, and probably the most helpful thing, because when I'm wrong, like I think you're identifying it well. I have added a lot and been wrong and then blown up the account. And so the solution then became don't add a lot, which made it the same problem, because it continues and then you don't add a lot. It continues and you don't add a lot. And then you blow up the account. Anyway, yeah, I think
it's just a slow death or a quick death. But either way, it's a death, right?
Yeah, exactly. So I think that it's go back to the original thing, which was like add a lot, but get out if you're wrong. And I think that's going to be.
And again, I'm making sure that's just to you, because if you're adding at the wrong spots a lot, you're gonna get out a lot, and you're just gonna death by 1,000 cuts.
Well, yeah, no. If I need work on my where I load up, because I'll be dying by a loss every week or whatever.
Exactly, but by 1,000 cuts. Hey, here's a 1% loss. There's another 1% loss. You know what I mean?
Yes. Yeah.
And that tells you then that you're not executing it correctly.
Yeah.
So again, but it's really on the breakouts. And honestly, when you're on the wrong side of a breakout, that's usually where people start to panic, fear, and all that. And that's usually where the loss starts to happen when you're on the wrong side of a breakout.
Yeah. Yeah.
So I'm saying turn that wrong side of the breakout into an opportunity to either A, get out or hit goal and you're done. And we did exactly that in our live class today. As soon as it broke out, we took advantage of it. Does that make sense?
Yes,
we on the same page?
Yeah, we are.
Comprendez-vous?
I comprehend.
All right. So going back to this really quick, we'll just play this one and then we'll call it. Where should it go? Where draw on the chart where it should go.
We are thinking it will go to the 50 of this whole thing up here.
Okay. And if you're thinking that and you get in, what should that be? It's in terms of how much money should that be for you? Not or percentage.
It should be 0.05, a nickel.
There you go. That should be a nickel.
Is it?
And this one,
we always want the 50 to be a nickel. Is that our?
it needs to be an exit. Let's just put it that way.
Okay.
And you're not going to exit if it's like 0.01. Do you know what I mean?
Yeah. Yeah. Okay.
So this needs to be an exit for put it in the bank.
Yeah.
You're banking that. Does that make sense?
Yeah.
That's all I'm saying.
Yeah. Yeah.
So,
that makes sense.
And what we do, we nickel and dime. So that's why I say that.
Yeah. In a perfect world, we'd be sized. We wouldn't have taken the trade because we know if it was a nickel or not. And then we would take it if it was the distance was enough for it to be a nickel.
All right. So we're looking for it to come here. But what if it doesn't? What if it doesn't?
If it doesn't, that's okay. We'll let it continue, and then we'll make this the new 50.
Personally, because of this setup, how far it's gone, 3 price cycles, this is the 50, all that kind of stuff, I'd probably be making this like a dime, if not a quarter. I'd get in with, that's a high probability that we're coming back to that point.
Yeah.
And if we don't, then I'm thinking we're going to get another reach down to this area. And I just add more in. This is my add smack in area right here.
The suspense is killing me. Let's see the next candle.
No, because what if I'm wrong?
What if he's wrong? We could just never find out.
Yeah. If I'm wrong, you guys will never trust me again. And
Come on, I'm on the edge of my chair. Let's see the next candle.
You pick this level only because a 4th price cycle? Is that what you're thinking?
Sometimes at the end of a 3rd price cycle, you don't get a 4th price cycle, but you do get an exhaustion bar. Do you know what I mean?
Okay. Yeah, yeah.
Something like that. You know what I mean? Or it's 3.5 or whatever. Because it tries to come down to a support area and touch it with a wick or something like that. You know what I mean?
Okay.
That's all. So let's see what it does.
Finally.
And with that, the internet's gone. Just kidding.
No,
All right,
I have a great deal of patience.
So there's our pullback, one pullback, but it's not what we're looking for, right? But that's a good sign that we're going to get that, or it's a failure.
Yeah.
You had an identical candle just above that.
A what?
You had an identical candle to that, just like up here. Here. That's the same. Yeah. And that's the same.
But what's different is that we're at the end of this move where it made this the 50. Sorry, it made that the 50. It should come to the 50 of this, which is right in here, which probably will correlate with this. Oh, no, that's not it. Probably correlate with this, the top of this, whatever. I can't draw a straight line. Anyways, but it should come back to the 50. And if it doesn't, you get a failure of that, and we could be coming all the way down to here, but I really doubt it just because of the way that the move happened. But even if we do, like I said, this is still a great time to buy. And if I do get that, then I'm definitely max profit becomes here, and this becomes goal, and I'm done trading for the day. If I load up here, get goal here. Does that make sense?
Mm-hmm.
That's how I trade that. All right, let's see how it works. And there you go. It was really quick, but it touched the 50 right there. If I would have played it real time, I'm sure it didn't go up there that fast. So it will give you your exit here. And if that's a nickel, then that's all you got. If you load it up, for me, I probably would have taken a dime, if not gold, depending on the amount of that. If this is like 6 to 10, that's gold. If it's 4 to 8, it's a dime, the pip size. So I'm putting enough trades on there because I'm super confident that move's going to happen. And that's how you read the invisible 50s. Recap, restate, regurgitate. Don't hesitate to capitulate.
What do you say?
This is your trading fate.
Are you asking me for a recap?
Yeah. Like everything we talked about, summarize it on a 3x5 card.
Yeah, I think it's mainly if one would take the time to look, you could see that the market more often than not, comes back and touches the 50. And that for me personally, do the analysis, look at it, see that's true so that you can have some confidence in it. And then play it that way, basically. And if you're light enough, you can count on the fact that if it doesn't go to the 50 at this first spot, it's fine. We have another plan when it gets to the next level to go to the 50. And then if you're in trouble and you need to load up, then do it at the right place and then get out if it doesn't work out for you. Don't take that on down the rest of the way.
And that's the most important thing for you, because I do believe that you know where you should load up. We traded together enough that you know the areas. And then when it doesn't work out, so if for whatever reason if you don't get out here and you don't execute here and you go heavy here and it comes down here, close out, you missed it, you don't go heavier here.
Yeah.
Does that make sense?
Well, let's take the next couple candles.
And you have to chalk this up to, I missed the execution. And sometimes here in live classes, like, oh, we missed it. Oh, we missed it. Sometimes it does happen as fast as a wick. But you got to be ready for it. That's why I talk about lately. I'm like, get your mouse over here. Get ready. As soon as it hits it, click it.
Yeah.
Because sometimes it does that. And if you're over here when it's right here and you're over here and you're talking and saying, oh, hey, I missed it. That's on you. That's on you as the trader.
I like that.
All right. Ed wants to see what do you want to see about the next candles, Ed?
I want to see the next 5 candles.
And we'll continue.
So what's going to happen?
Actually, it's going down. It's going down, down, down.
To where?
Let me get my pencil.
To the bottom.
Okay, we have this box here. Whoops, that's not a very good box, but that would be the target for me. I don't know how to draw a straight line.
Yeah.
Yeah, me neither. Don't worry.
So anyway,
that's your zone for. Do you think sellers are going to take it down there?
Yep.
I would probably agree with that, but this is where confirmation for me happens.
Well, yeah, I can see that.
Right here.
I need a lesson.
If we get a close and it comes up to here, we could just stay in here in this zone.
Agreed.
So right here is for me to say again, for me to say, what do you do in market? I don't care. Just show me and then I'll trade it. I don't care if you come back up here. I don't care if you go and break here. But if you break here, then that's confirmation you're coming here. If you break here and stay up here and really break here, then that's confirmation that we're living up here. I don't really care at this point. And so I would not jump in to any trades with aggression. If I'm going to put a trade on, it's 1 or 2 trades now, because I could be wrong and I don't want to be stuck on the wrong side of that analysis because it's making the decision here. There's no high probability here about anything other than the fact that we had this move and it should try to get back up to here because of 1, 2. And if we get a third, it could happen and come down to here. So this has a lot of information, whether it's going to break that or not. So let's see. There it goes. It still hasn't.
I was going to break it. Yeah.
Right. And it still hasn't broken this level right here. This is what I'm looking at.
Okay.
Before I said, remember, it could still come all the way down to here. And I'm still buying in here. Still buying in here because of that bounce. So let's see.
Well,
oh, wait. Now where's the 50? Because we just got it again. It just happened again. Invisible 50. Right here.
Yep.
Right here. It should be coming here to the 50. But also of this entire move here. Do you see that? There's a 50 here and there's a 50 there. This 50 is of the break. This 50 is of the entire move. And this would probably be a dime. And this one's a goal right there or more, depending on how fast it gets there. But that's the invisible 50. And we'll see. There's the first 50 of the break. Do you see that?
Yeah.
And we'll see. Now the test is it going to break this area right here? And usually the faster it goes down, the quicker it comes back. So that's what I'm saying. I'm pretty heavy here, right here and here on buys because I do not trust this at all. That move. And I'm back now because of that. I got heavy here. If I didn't get out here, which I would have because I'm heavy, but if I didn't, I get heavy 50 out. Fail to execute here, that's my fault. Because this is a classic example of how if you're buying through all of this, you could risk out. Right there. That's why I go back to the very beginning. Know where your 50s are. Breakout 50. Breakout 50. Breakout 50. It did it every single time all the way down, didn't it? And if you don't get out here, don't get out here, don't get out here, don't get out here, it's a risk out. Makes sense? But if I'm opening, I'm still buying. Okay, this is a very overextended market. And I'm curious to see where it turns because I'm seeing now this is definitely the 50 and this is really juicy. But this is really juicy to come back. And it's one of those ones where I would be picking up profit all the way down. Buying in, exiting, buying in, exiting, buying in, exiting all the way down. And I would be doing that. Just buying in, exit, buy, exit, buy, exit, buy, exit. And then on the first, because I do that. That's something that you and I have talked about. On the first, I'm always exiting. I'm always taking it on the first. And then I'm holding on the second. So if it comes back down here, gets in again, I'd hold on the second. So I'm always exiting on the first. You combine the power of your exits with the first at the 50s, it's a really high probability exit. All right, I'm just curious now. Now I got my curious. Where is it going to turn? And it has, in order for me to get confirmation that we're turning, it had to close here, or on this one, it has to close here, or on this one, it has to close here. Failure to close any one of these means we're still in continuation down area. So I would assume that this is where it's going to happen. And I would also assume it's coming back to here if it does.
But it did come down to the box I drew.
It did. Is it going to stay there, you think?
No, now it's on the way back.
There you go.
Wow.
Isn't that interesting? There it is. Right back to the 50. And I would have killed it trading this
Yeah, you
account.
would.
So pick up, buy, pick up, smack in, pick up on the first right here, smack, get back in on the second, and secure it here, and then pick up right there. And that's how you do it. And this is a totally random chart. I would ask everybody to go through this exercise, because going through this exercise builds confidence. And that's what we all need when the market is running against us. And we need to compartmentalize to know, is it the market's fault or is it I didn't execute fault? And if it's the market, there's nothing you can do about it. Nothing you can do about it. But if it's you and you didn't execute, well, then you can get better at executing. Some days it's easier than others to make money. And I would probably say that this day, if you were trading this, it would have been easier to be in a sell, or it's harder, depending on how you view the market. If you're a counter trend trader, it's harder because you're wanting it to turn, and it doesn't turn. If you're a trend trader, it's easier because you only need to put in 2 trades and people let it ride. And, oh, hey, here's my goal. Thank you very much.
Some people might use a few more than 2, but
no, but some people don't.
Yeah.
As soon as they're in profit, they're scared to add any more because they don't want to lose their profit.
Yeah, I'm a scale in.
But I'm not talking about position size. All I'm talking about is you will either view the market through the lens of trend or counter trend.
Yep.
And it doesn't matter. And it doesn't matter how you view the market. If your execution is good, you're going to make money either way. But honestly, in my mind, this is where the difference is. And you would have, let's just say this was 5%. Let's for kicks and giggles. You would have made 5% here. I would have made 5% here.
Yeah, I don't know. You probably made 10%. I made 5.
But does that make sense?
Yes.
I'm waiting for this move. You're getting it on the down. And if you don't exit, which you do, I'm not saying Ed, I'm saying if you don't exit and you're a trend trader, then you just gave it all back.
Oh, yeah, absolutely.
Right there. That's what I'm saying. It all comes down to execution. It matters how you get there. And if you're failing your execution, then you'll never get there. That's why I'm saying you've got to be able to read the market and know when the market is wrong or you're wrong. That's the first step to every trader. If I executed correctly?
I'm not wrong. The setup might be wrong.
You're right. Absolutely. Thank you for that correction. But what I'm saying is, did the market do that or did your execution lacking? And that's really hard to get to that stage as a new trader because you don't know. Yeah. You don't know what your execution is. You don't know what your rules are. You don't know your strategy. You don't know your setup. So you just leave it all up to luck. All right. Anybody have any questions? Anybody have any questions or comments or before we close up? Thoughts? Nick, what do you think? Is this a good class for you? Was it worth your admission? Your hot seat debacle?
Yeah, I think so.
I'm excited to get you into boot camp next week. So what I would say is come prepared for boot camp on Tuesday with some of your losses that we can evaluate, and we can really hone in on saying, is it the market or is it your execution? And I think that's what we should work on in boot camp, is like really hone in on saying, can you see it and you're just missing the execution, or do we need to work on you seeing it? Does that make sense? I feel like you can see it, but we'll dial it into and really define that answer.
Okay. Sounds good.
Anybody else have any thoughts before we close up?
Yeah, David,
This
I
is
got
amazing,
a question. Oh,
Yeah, go ahead.
Okay.
No, go ahead.
So it seems to be that a good place to exit is also a good place to enter for the opposite direction.
Yeah, max profit is always a great entry for the other direction. Yeah.
So we could just be flip, like always in with this.
You could be.
With this idea, as long as it's enough pips in between what would be a 50 for.
As long as there's enough pips plus. Well, I'm going to say that most people can't do that. It's very difficult to see money on both sides when you pick a direction, because you ignore the other direction.
And I guess that's they're biased, and I guess that's why my question, because that's what we're trying to do. So if we're really seeing the market holistically, then we could play that. We could play that way and be good and profit the whole time by sell, because we do it sometimes, right? We do it. It's just sporadically, because we might be seeing we might want to stay with the trend for a little bit, and it's not like we want to flip every 10 pips, but theoretically we can.
Yeah, exactly.
Okay, got it.
Yeah, it's a great question, great assessment. And if you can get to the point, which I don't think it's I can never do that thing. It's just a skill that needs to be developed, being able to see both sides of the market. That's what I'm trying to help you guys get to see, right? Is if you can see where your exit is, then the next logical step is that's a good entry for the next direction, as long as it's within the parameters that we say. Is that exit at the 50? Is it 50-50? And there's times in this class today where I said, I'm probably not entering here because I don't know if it's going to go higher or lower. I'll wait for the market to tell me that, instead of just immediately saying, oh, I took profit, now I'm out. You got to go back to that assessment every single time, but the more times you do it, the faster you get at it, and it just becomes more muscle memory. Going back to the 3 R's that we talk about, the read, react, and resolve, right?
Well,
you got to be able to read it, react to it. What's that?
We range a lot. We get days where we've been trending a lot recently, but we do get these days where it stays in this range, and that's where you have to pick both directions, because it is going in both directions, right? You don't have to, but that's how you're gonna reduce your risk, by hitting your target quickly, right? Yeah. So I guess we could acknowledge that we're in a big range, and we do. Yeah. Maybe I'll jump into a hot seat sometime soon again.
You should. I'd have some fun trading with you for sure.
Okay, cool.
I would ask that every single person, everybody, go through that little exercise on the 50s. Learn to see the invisible 50s, and do it out of 10 times. How many times did it work out? And if it didn't, did it make that the 50? Because usually that's the other thing. If it doesn't, if it's part of that 20% that it doesn't, it probably made it the 50. If today's trading session opened your eyes to the invisible 50s, then do this exercise 10 times and look for the 50s. How often did it pull back? The confidence comes from proof, not just theory. And if you want to trade live with us every single day, then head on over to tradethefund.net and join our next live trading session in the morning. We don't just teach strategies, we trade them. So we'll see you there.